Hey, what's up, stock compounders? Brad here. So it is that time of the week again for our Q&A session. Real quick before we get into this, go to our last Punchcard Investing video and leave a like. If we get enough likes, we're going to show you guys video footage of some of our hidden talents from the members on that channel. That should be very interesting. So head over there, leave a like. All right, let's jump into the Q&A here. I asked myself, as I do every week, what books are you reading lately? So there's 3 books that I'm reading at the moment. This is one of them, Investing for Growth by Terry Smith. Fantastic book. I'm also reading The Almanac of Naval Ravikant. I've listened to it multiple times on Audible. It's one of those books I'm really just trying to go deep into, so I'm reading it multiple times. And the last one is The Beginning of Infinity by David Deutsch, which was recommended by Naval Ravikant. It's, pretty wild stuff. So check that out if you are interested. Not about investing, more kind of deep philosophical stuff. So those are the books I'm diving into. If you hadn't owned Micron already, would you start a position now, and with what conviction? So I bought at $35 per share a couple of years ago, it was 2019. I think it was in May of 2019. Would I buy now? I think I would buy now. I don't know if it would be a full conviction position. It might just be like a 10% position that I would open now in Micron. None of this obviously is investing advice. Do your own homework. But I am quite bullish on the future of Micron, even from the price today, which is around $74 per share. What's the intrinsic value and margin of safety price of Micron according to your evaluation? Intrinsic value. So I've been thinking more and more, not about the current intrinsic value of a company, more about, what I think it's going to be 3 years, 5 years, 10 years from now. And as far as Micron, I think there's a compelling path to upper 200s per share in the next 4 or 5 years. So what is that? Like almost a quadruple from today's price in the next 4 or 5 years. So to me, that's a great rate of return. Obviously, we don't know if that's going to happen. But that's kind of how I'm looking at Micron at the moment. And I'm kind of moving away from the DCFs and the margin of safety, getting real specific in my Excel spreadsheets, more just to kind of broader stroke frameworks for thinking about what a company might be worth in 5 or 10 years from now. So, and check out my Micron video if you're interested in how I'm thinking about that for Micron. What is your circle of competence? Charlie says you should be able to clearly define the boundaries. Can you share yours as an example? So I don't fully resonate with the whole circle of competence idea. For me, it's, am I interested in a company, right? Investment ideas come along usually by looking at what great investors have bought recently. The first filter for me is the company interesting? Okay. I have a background in engineering, so that helps me understand concepts better in certain areas than, say, in retail or sectors that have nothing to do with that. But I can't clearly define my circle of competence. If a business is interesting, then I can sort of dedicate some time to digging into it and, trying to understand it. And I don't always do that. I think I'm moving more and more towards sort of a mechanical cloning approach to investing, the more investing I do. Part of that is because I don't have entrepreneurship experience. I don't have business experience from a young age, like Buffett, like Pabrai, like a lot of these great investors had. And I think that's really important, to have that early business experience, to be able to really understand different businesses, kind of from the ground up. So, and there's a whole host of psychological things that come into play when you really have a clear investment thesis for a company, and things shift. Business is messy. And I think I'm probably better suited in the long run to identifying, okay, who are the great investors, and in large part, just cloning them. All right. And that's, I've done that with this Turkish company that I bought that Monish Pabrai is quite bullish on, thinks it's going to be the first 100-bagger potentially in Pabrai funds. So I'm, the more I learn, the more I'm shifting towards, all right, how can I win on the behavioral or psychological aspects of investing, as opposed to, understanding the business better than most other investors and gaining the edge, going down that rabbit hole. So just a piece on that. If you had to pick the best book you have ever read, which one would it be and why? The best book you have ever read. Whew, man, that's tough. Yeah, I don't know that it comes to mind. So maybe I haven't read it yet. Maybe if I had read a book that just knocked my socks off, it would just bubble to the surface very quickly. But yeah, I don't know. I can't pick one. Maybe if I think about it for a while, I can come back to you, J Money. I've been watching your videos for quite a while. Very impressed how quickly you've developed as an investor. Thank you, Winston. I know your family is still very young, but do you plan on teaching your kids about investing? And if so, how will you go about it? Yeah, I would like to inspire my children to get into investing from an early age. I've already kind of started accounts for them since they were born. I think, it's a very tall order. It's a very large challenge to teach someone something. All right. I think, they really have to be sort of intrinsically motivated to learn that kind of thing, rather than, you can't teach somebody something that they're not interested in. So I think a big part of my approach to teaching my kids about investing is to figure out, how do I inspire them to be interested in investing and really grasp sort of the compounded benefits of investing, particularly from an early age. So that's not really formed yet, how I plan on going about that. I think it's super helpful having this channel, and getting feedback from all of you as I go along in my journey. I'm sure I'm going to pick up a ton just from what I learned from each of you guys. But yeah, I'm not sure yet. I'm confident though that I'll be able to find the thread or the couple threads that I can tie into investing in terms of what they're interested in. So it'll be interesting to see how all that plays out. You made a video on Chris Meyer's portfolio, but are not cloning any stocks from his portfolio. Why? He's only bought 2 companies recently, at least in the first quarter of 2021 that I can tell. It was Evolution Gaming out of Sweden and Topicus out of Canada. And, gaming I'm not so interested in. I don't really want to own a company in that industry. Because I'm not interested in the industry, I think it will be very hard to hold a position like that for the long run. So I just don't even go there. But in terms of Topicus, I just don't know enough about it to be comfortable buying into Topicus at this point. It's possible that I'll get there, but I'm not in any rush to get in to that one. I'm also still really trying to get into Chris Meyer's head to understand, what his investing framework is. I know he wrote the book 100 Baggers, but that was less about his investing framework. It was more, breaking down how did these companies become 100 baggers. And one of the takeaways from that book is, you've got to buy small. You've got to buy companies when they're small in order to really get those 100 bagger opportunities. And he really isn't doing that for the most part. I think Topicus might be the smallest that he bought, somewhere around 2 billion market cap. So I'm still trying to get a feel for what exactly his approach is and why it seems like he's targeting, or not necessarily targeting, but ending up with these companies that are in the tens of billions of dollars in market cap in his portfolio. So still trying to get comfortable with that. It seems you added more ads to your videos, 2 or 3 per video, when you were doing just one. The changes like investing in T versus cost. I will still watch your videos either way, but I'm sure you get my point. Yes. So how many ads I incorporate into my videos is something I've been playing with. I know when I let the algorithm do it automatically, it was doing like every couple minutes ads, which was way too much, okay? And when I got feedback from you guys, I took that to heart. I went, I folded the paper back all the way the other way, and I was just doing one ad in each video. So I would, if it was like a half-hour video, I would do an ad at 15 minutes. And that seemed like not quite enough. Sort of where I am now is an ad every 8 minutes or so. I mean, not for the really long videos, like the Q&As, I'll probably just put 2 or 3 in there. But like for Micron, for example, it was a 27-minute video, so I thought, all right, I'll stick 2 ads, maybe one around 9 minutes, one around 18 minutes, and I feel good about that. I feel like that's a fair number of ads. So I'm still playing with that. I get most of you guys probably want as few ads as possible, but you can think of it this way. Every time an ad shows, you guys are sort of contributing to my efforts with the channel. So I appreciate that. Hopefully I'm giving you guys enough value that you're able to find some pleasure in those ads popping up and knowing that that's kicking back to me. So just something to think about. Whatever became of your Expel video you posted? I went to watch and was unable to find it anymore. Curious why you may have pulled it. So I did not pull it. I don't think I ever made a video specifically about Expel. So Expel showed up in my video about 1,000 baggers. So I did a little research. Companies that returned 1,000 to 1 over the last 40 years or so. I think my starting year was 1980. And there were like 23, 24 companies in that list. And Expel was the one that got to 1,000 baggerdom the fastest. It was just a decade to get to 1,000 baggers. So an incredible story, but I don't think I ever created a video entirely devoted to Expel. Yeah, I don't think I did. So maybe that's why you can't find it. Curious if you file your own taxes or have a professional do it. Do you have any book recommendations on taxes? Whew, taxes. So I use TurboTax for my taxes. I don't even like doing them on TurboTax. Certainly it's a lot easier than doing them, myself. I think it's probably a smart thing to hire a professional to do it once it starts to get a little bit more complicated. And I don't have any book recommendations on taxes. Sorry for that. Money flowing into the S&P 500 pumped the price of Apple shares. Yep. Do you think Buffett and Munger are considering these capital flows when deciding to buy Apple or Baba? I don't think they are. The reason money flowed into the S&P is because the market kept going up, right? It's been a long bull market, but nobody knows when the bull market is going to end. And as soon as the bull market ends, money is going to flow out of the S&P 500 and Apple, right? And Alibaba. So to me, that's kind of a macro timing consideration. And I don't think Buffett or Munger are really dialed into that kind of consideration when they're making investments. So my guess would be they don't consider that at all. Do you plan to buy a rental property in the near future? I don't have any plans in the near future to buy a rental property. I am going to be buying property for myself, property for my family. But, I think it would probably be a mistake to divide my time between investing in the stock market and, spending the other time figuring out rental properties and, real estate income generating properties. I started out in the real estate investing world, and the stocks are just they're just a better fit for my temperament, for my personality. Okay, so no plans for rental property in the near future. What is the most accurate way to find out a super investor buy price on their investments? I believe Dataroma gives you the highest price of that quarter. That is correct. The price reported in Dataroma is just the price at the close of the quarter. Okay, the last day of the quarter when the market closes, that's the price that's listed. The most accurate way is if that investor sends out letters to shareholders and actually discloses what they paid. Another way is if the investor has like considered a 5% or greater beneficial owner. They have to disclose at what price they bought their shares. So those are a couple ways to see. But most of the time, I don't know. What I do, I just look at the low price in the quarter that they bought, and I assume they bought at the low. Okay? If I'm cloning, that kind of builds in a margin of safety because, they're never going to buy right at the low. But if I assume they did, then I can work off of that, and that's going to build some conservatism into, what I think their entry price was. What is your current portfolio? Example, Baba, Micron. So my biggest holding right now is Micron, and I think Seritage and Alibaba are fairly comparable. I don't remember the percents right off the top of my head. And I hesitate to really, put up the pie chart and tell you guys exactly, what my allocation is and everything that I'm invested in. I've talked about all of my investments in the past, but I really don't want to be pegged as the guy who's invested in this or the guy who's invested in that. And I don't want to be giving you guys stock tips. Okay, this channel is all about me learning how to be a better investor. Hopefully it's about you becoming a better investor. And, giving stock tips, I don't think helps anyone do that because, I can give you all the stock tips in the world and you can go out there and buy the stock, but you're not going to hold it for 10 or 20 years based on a stock tip. That's just not how conviction works. So, I don't think it's serving anyone's long-term interest to do that. But Micron and Alibaba, definitely two of the bigger positions in my portfolio. Are you thinking of buying more Baba at this level or lower? Yes, I am. I'm open to buying more Baba. I haven't yet since I originally bought at $227 per share. Obviously, the price now is much more compelling than it was when I bought. So that's certainly, that option is certainly open to me, adding more into Alibaba. Like I said, I haven't done that yet. Besides Andrew Rosenblum of Bonsai Partners, any other under 100 million asset under management managers you like? Yeah, I like Chris Meyer. I definitely keep an eye on what he's doing, mostly through Twitter. He often tweets where he'll say disclosure long or whatever, so you kind of piece together what his portfolio is. Anyone else under 100 million? Altifox is interesting to me. Connor Haley. I think they're under 100 million. I haven't, maybe I've seen them on ticker. I'm not sure if they have 13Fs or not. But I'm really in the early stages of kind of piecing together smaller fund managers that I want to follow. And that reminds me, there was a tweet recently that my buddy Enrico put out, piecing together, track records of different great investors over time. And that inspired me to really dig into that. So that's a project I'm taking on that you guys are going to be seeing more about in the near future. Trying to figure out, over the last 15 plus years, which investors have the greatest returns. And they need to be sort of concentrated investors where, maybe their top 5 positions make up 50% or more of their portfolio. And I say 15 years because I want to make sure it includes at least one big market crash, okay? Because, you can have great returns over the last decade, but it's hard to tell how much of it is skill versus how much of it is leverage versus how much of it is luck. You really need that big downturn in the mix in order to separate the wheat from the chaff. So I am 15 years old. That is awesome. I love that. So glad you're here and are learning about value investing. Could you recommend 5 books about investing? I've read The Intelligent Investor. Yeah, I would read The Dondo Investor by Mohnish Pabrai. I would read The Most Important Thing by Howard Marks. I would read The Little Book That Beats the Market by Joel Greenblatt. I would read this book here, Investing for Growth by Terry Smith. And I would read 100 Baggers by Chris Meyer, right off the top of my head. Those come to mind. And I have to throw one more out there. The Poor Charlie's Almanac. Okay. So many incredible lessons in there from Charlie Munger, who's one of the greatest investors of our time. Have you checked out Fixed Price Group? Chris Meyer tweeted about. No, I haven't seen that tweet, but I'm intrigued now. So thanks for nudging me on that. I'll have to pay closer attention to Chris Meyer's tweets. Have you tried Guru Focus? And if so, what are your thoughts on it? So I assume by tried, you mean did I get a subscription? Because I think that's a paid service. At least most of it is behind a paywall. I think it was maybe a year ago. I think I signed up for like a free trial on Guru Focus. I believe that's the site that I used where you could do like a global magic formula screener. I think they have a number of different screeners through Guru Focus. But if I recall, it's quite expensive. I canceled, before the 1 week trial was up. So no, I haven't done much with Guru Focus. I've never given them $1. So I'm not the right person to ask about that one. What is the one stock on Mohnish Pabrai Roth IRA or his managed daughter Roth, right? So Pabrai often talks about how concentrated his personal account is or his daughter's retirement account, where he usually has just 1 to 3 stocks in there. If I had to guess, I would say he's probably got a significant stake in the Turkish company Raisis Logistics. I don't know that for a fact, so do your own homework on that. But he seems most bullish on Raisis, especially for a personal account where there's not hundreds of millions of dollars to deploy in there. Because the market cap on Raisis is something like 115 million. So great for a personal account or a Roth. Unless you're Ted Weschler, then maybe it's too small for a Roth. All the new age tech stocks are being valued at price to share basis. From a value perspective, for a company growing at 30% on price to sales basis, as I say price to share, I meant price to sales, what would be a reasonable valuation for a company growing at 30%? Well, that's too hard. I mean, there's so many factors there. I can't give an umbrella statement about that. Yeah. Why is Michael Burry considered a super investor? How did he get the bet on the market crash right? Oh, he did get the bet on the market crash right. Wasn't he just lucky? After all, no one can predict a crash. He's considered a super investor because people see him as a super investor. That's one answer. I don't actually know what his compounded returns have been since he started investing. I don't know that that's documented anywhere. But when you make a call like that, when you bet the house on something like the housing crash and you get that right, that works wonders for your public persona and, for your allure in the investing arena. So that's part of it. It was fascinating also to see him involved with GameStop when GameStop just went asymptotic. I think he got out fairly early, quite a bit earlier than, when it went to the clouds. But it was pretty fascinating to see him involved in both the housing crash and the short squeeze of the century. So he seems to be in the right place at the right time. Now, I don't know that all of that was luck. I'm sure, I know he's a smart guy. But yeah, the short answer is he hit a home run in a very public way, and he's perceived as, a very intelligent, successful investor. So, and again, I don't really know how to evaluate him. I haven't looked at his long-term record. He seems to be doing very well over the last couple of years, at least looking at the assets under management of Scion. So what's your opinion on capital allocation with a small portfolio value that you were adding to monthly? Let's say you hold 3 positions, but you entered each position when you had less capital available, and now the price of each position is too high for you to buy more. Okay? You can forget about those positions. Do you cash out of the positions and invest heavily with more capital into new ideas? Hold the positions even though they are now small bets. Or wait for the prices to fall again and buy more. Boy, I don't have any brilliant answer to this one. It really depends on your framework, right? Are you trying to buy into companies with an owner mindset where you want to hold it for decades? In that case, if the price has gotten too frothy on those, but you are of the framework that you want to be an owner, just put them away, put them in the coffee can and hold them. Yeah, so it really depends on your approach. Personally, if I buy and the price has risen up to the point where it's no longer a compelling investment, I just leave them as long as the investment thesis is intact and the business is getting better. No reason to tinker with that. And then as cash comes in, I find new opportunities and deploy the cash in those new opportunities when it's kind of an easy swing, right? It's the fat pitch right in my sweet spot. And so I'm fine letting the cash pile up for a year, 2 years even, until I find something. Hasn't been the case recently. There's been a lot that's compelling. But yeah, that's how I approach it. But again, it's going to be different for everyone. You have to kind of do some work on it and figure out what approach makes the most sense for you. Would you be open to private equity or buying whole businesses if your capital base gets large enough? I don't think so. I really want to be a passive player in this game. So, buying whole businesses, to me, that means I get more active, right? And it potentially means I have more skin in the game in just one particular company. So, no, I really like the game that I'm playing now, which is passive investor. I'm just along for the ride. If someone gave you a full position worth of money and you had to invest it tomorrow in a new position, so a position that I don't already own is how I'm interpreting that, what would it be? I know you just got into a new position in Turkey, but are you close in anything else? No, I'm not close in anything else. At the moment, I'm really just kind of doubling down in terms of diving into what I already own. There's been a lot of activity recently, buying Baba, buying Races. I opened a position in Process. I mean, it's been a flurry of activity this year. So I'm not really looking hard for new opportunities. So yeah, I wouldn't be ready to deploy it in a new position is the honest answer there. But if the money was going to disappear and I had to invest in something, what would it be? Well, I'd probably spend all night trying to figure that out. I don't have the answer right now. Sorry, Chris. Magic formula investments are for 1 year, not long term. If you were to make a 10-year bet on 3 upcoming superstars, how would you go about picking them? Have you done a video on that? No, that's an interesting question. If I were to make a 10-year bet, yeah, I guess I would really turbocharge my efforts to find, these smaller investors managing probably under a couple $100 million, and look for those high conviction bets, and try to get comfortable with the 10-20 year runway for the business, and make sure there's skin in the game, right? Management has a significant ownership stake, insider ownership. That would be my starting framework for that. But no, I don't think I've done a video on that specifically. So anyway, guys, thank you for all of your questions this week. Always appreciate hearing from you guys, knowing what's on your mind. I wanted to mention too, there's a few people who responded to this question that I was asking myself, but that's great. Intelligent Investor, Investing for Growth, which I'm reading as well, and the book from Guy Spear. I believe that's The Education of a Value Investor. MadCon is reading the discussion on modernization from 2016, written by Li Lu. I bet that's a phenomenal book. Trend Watching by Ron Insana. It's kind of about the history of bubbles and how there's always a bubble somewhere, right? It's really just the nature of humans that we create these bubbles. 100 Baggers, The Dondo Investor, The Outsiders, Richer, Wiser, Happier, 100 to 1 in the Stock Market by Phelps. Rule Number 1 by Phil Town. Instead of Rule Number 1, I would say go right to Invested by Danielle Town, who's the daughter of Phil Town. They kind of co-wrote that book. It's sort of a current day approach, Rule 1 approach. So, Phil Town has tweaked some of his strategies over time, and that's the most updated resource for what those are today. And Investing for Growth. So a lot of you are on the same page as me, which is awesome, digging into Terry Smith's book here. Yeah. So that's it, guys. Thanks again for all your questions, and I will see you all in the next video. Take care.